Right, good morning, everybody. Another warm welcome to a Mesh Energy Wednesday webinar via MESHWORK for the second week running. Hopefully, you're getting on with that all right and finding your way around and asking plenty of questions. We've had plenty of activity on the platform this week. As far as the webinar is concerned, just by way of the boring kind of the admin-y stuff, do keep your mics on mute where possible to make sure everybody else gets the most out of the presentation. Do bring up also the chat box. There is going to be a lot of questions after during Sue's talk today, so she'll rattle through that and we'll spend a fair amount of time on questions and case studies. So do put your questions in the chat box. We'll run through those. We'll get all of those answered by 11 a.m. at the latest when we finish the webinar. And also a reminder, we are recording this, so if you have to drop out halfway through, you can watch it on YouTube. Feel free to share with others that. Get them on MESHWORK as well, so they can benefit. And Sue's expert advice can then be watched over and over and over and over again, whatever time of day you like, whatever time of day you fancy. And when R&D tax credits, when it comes to that time of year for you to do them. So without further ado, Sue Nelson's our guest speaker this morning. Good morning, Sue. She's a specialist, as one might imagine, in getting money from the government for doing some pretty cool and sustainable things, particularly with regards to this webinar. So I'm going to stop chatting and hand over the reins to Sue for the next half an hour or so. And as I say, then we'll get into questions and get some answers. Sue, over to you.
Thank you, Doug. Just want to tell everybody that I'm not an accountant, and I understand about R&D tax relief, which is sort of our expertise. But this doesn't contain jargon, and I'm hoping it's not boring, because as soon as you mention tax, you never get invited to dinner or nobody wants to speak to you. But actually, this is really important because it's about really innovative companies, of which so many people and the Mesh Energy series are really involved in that sort of thing. So it's about getting people who are doing amazing things some money that they probably don't realise they're owed, or if they are doing it, they probably aren't claiming as much as they should. So I'm hoping what I'll be able to do today is run through the scheme at a very high level, and then I'd like to give some case studies of the sorts of people that we've helped in the area in the sector that you work, just to see, if you recognise yourself amongst that and understand whether you're claiming what you should be. So this scheme was brought in the year 2000. It's been around for a very long time. So we have the same scheme across Europe, Australia, Canada, America. It's not peculiar to the UK. I can't see it going anywhere. I think it might be refined over the years, but basically most governments want to keep people who are doing groundbreaking technology and work in the country that they're situated in, and they want to reap the benefits of that innovation. So when you normally contact HMRC, you're on the phone for at least half an hour and you can't get through to speak to anybody. And it feels to me like you're often guilty until proven innocent as far as your tax is concerned. The people who deal with the R&D side at HMRC want to give this money away. They are tasked with making sure the people who are doing this stuff get the money they deserve. And we've always found them to be really helpful. And we have a really good communication with them to make sure that we understand exactly what the scheme is, and we only ever put in stuff that they're happy with. And because of that, we've done over 1,000 claims. We've never had any rejected because we wouldn't put them in if we didn't think they were eligible. And I think out of that, we've only had 3 or 4 inquiries from HMRC. And I think the reason for that is that they believe we are their gatekeepers for them. So just before I start explaining the scheme, which I'm just going to take 10 minutes and then do some case studies. Just to let you know, I set this business up just over 5 years ago from scratch, and I sold it to Ernst & Young last March, which was an interesting process. And so I do understand what it's like to run a small business. I do know how hard it is, and I do know that there have been many months when I first started, where I was awake at night wondering if I could pay the salary of my staff that month. And it's tough. It's tough running a small business. And the reason why I'm passionate about this particular funding scheme is that you need all the money you can get when you're a business owner. And this doesn't take long. And on average, we generally get back, and it happens to be the HMRC average, we generally get back around £60,000 in cash for our clients. That's quite a lot of cash without too much effort. So let's have a look at the actual scheme itself. I'm just about to share my desktop. Can we see that, Doug? Yes, all good. Okay, so let's have a look. It's called R&D tax relief or R&D tax credit, which is probably one of the world's most stupid names because it's not really about R&D and it's not about tax and it's not about credits or relief. What I prefer to describe it as is it's cash for innovation or tax benefit for innovation. So I'm going to talk about, there's two schemes, one for SMEs and one for large companies. SMEs in this definition is having less than €100 million turnover. It doesn't seem like a SME to me. So if you're in that bracket, you're classed as SME by HMRC. There are around 4.5 million SMEs, and there are literally only tens of thousands a year claiming. So we know that in essence, it's the UK's best kept business secret that so many people out there aren't claiming when they should be. So without doubt, it's the biggest funding mechanism for small businesses. And if you are investing in innovation, and I'll describe what innovation means in this context, then you really should be claiming for this money. And I don't care whether you claim it with me or anybody else, just make sure you claim it. So the deal is pretty simple. If you're a business owner and you're developing software, so you might be developing software in-house to make your business more slick and efficient, and you can't find what you want as a proprietary piece of software, so you're having to code or get people in to make your business more efficient, that would claim under this scheme, for example. You can also claim for new processes. So we have had a number of our clients who, for example, are manufacturing. They might be manufacturing for the house building sector. They might be manufacturers of foodstuffs. But actually what they've had to do is work out a whole process from end to end in their factory of how they will make this more efficient and more innovative, or perhaps they're using new materials and they're having to work out how to integrate that into their processes. So a process itself and the time that you take to work that out is also eligible. And of course, what people most probably connect with it is innovative products. So if you are designing or producing or working in order to look at new legislation and how you meet that in terms of your products or your services, or you're using new materials and they have different qualities which you have to build into your systems, then all of that time and all of the things that you're doing around that project are eligible. If you or you have a client can tick all these 5 boxes, it's beginning to look pretty good. So you need to be a limited company. If you're in a partnership, I'm afraid that doesn't qualify. So if you are an LLP or you're not a limited company, then you can't claim. If you are doing a lot of innovation and you are in a partnership, there are great benefits of being in a partnership, as we all know, that sort of structure. However, it means that you're not eligible for R&D tax relief. And if you are doing a lot of innovative work, you may wish with your accountant to have a look whether that structure is the right structure for you. You've got to have been trading for at least a year, because basically it's not a grant. What happens is you have your costs in the year and then you claim those back. So you have to have finished 1 year's trading in order to claim. You've got to employ less than 500 people to be eligible for this scheme. There is the bigger scheme, but this is the SME scheme. And your turnover needs to be less than 100 million euros, which is roughly 85 million pounds a year. You've got to be working on something new and different. And I'm going to explain exactly what that means. But the best way, I think, of looking at it is what you're working on, would one of your competitors steal it if they could? Because it's taking so much time and effort, and they would like to shortcut and have what you've got. So it doesn't have to be original, and it doesn't have to be unique. It has to be something that's not in the public domain and something you've had to work hard in order to work it out yourself. So it is perfectly feasible that your competitor would come up with the same solution and still be eligible for R&D tax relief if their work isn't in the public domain and you've had to work it out yourself. So it's not like a patent in order to claim. I know I'm going to get lots of questions, but that's all fine. So let's have a look at the scheme in a nutshell. To be eligible, the company needs to be making a profit, but actually the company could also be making a loss. So there is a big myth that somehow you can only get R&D tax relief if you're in profit. This is fundamentally untrue. If you're making a loss, and I know some people have really struggled this year, it still means if you've been, had expenditure for R&D, that you would still be eligible. I'm afraid still a lot of accountants believe that the R&D tax relief is only eligible when you're making profits, and it's just absolutely untrue. What do you need to do the cash? Well, to get hold of the cash or the tax benefits, basically there are two parts to this. And the reason why I set up my company is because I'm a marketing person, and marketing people tell stories and sell themselves by explaining things clearly and as a story. And actually 90% of the work of putting in an R&D tax relief claim to HMRC is writing a technical report. It's not itemizing the cost. That's the smallest part of the work. And the technical report looks at every element of the legislation and effectively writes to HMRC to show how your projects meet that legislation. And that is what we're good at. We're good at writing those stories by interviewing our clients. You don't have to write anything yourself. By interviewing our clients and working out what it is that they do, and then explaining that as clearly as we can to HMRC and explaining how that meets the legislation. In my personal opinion, that is why I think a lot of accountants struggle to do R&D tax relief claims, because actually it's not about financials, it's about writing about new materials, new processes, new science, software development, all that sort of stuff, digital innovation. And we have experts who are engineers and software developers who can write that thing. They're not accountants. On the other side, once you've done that report, you then have to itemize the costs that show what you spent on doing that work. That, of course, is what accountants are brilliant at. So it's those two elements that make up an R&D tax relief report. So understand the process. Inside HMRC, there's loads of people who process these claims, very much like your normal tax return at the end of the year. They will look at the technical report and decide whether you're eligible or not. They won't even look at the costs to start with, because actually the technical report will tell them whether you are eligible and whether you can go forward for a claim. So the first thing they look at is the technical report. After that, they go, yeah, okay, that meets the criteria. They will then go and check your costs. So the technical report is the most important thing. Basically, the way you apply to HMRC is it's on your corporation tax return at the end of the financial year, and it's attached to that. So the report that we write is just a PDF attachment that goes on to the corporation tax return, and the figures that we have in our report showing your costs actually then get entered into the tax return as an overall figure, and that's what triggers whether you get cash or tax benefit. So let's have a look at what R&D actually is. So we all have our view of what R&D is, but this is HMRC's definition of R&D for the purposes of this particular piece of legislation. So you have to have an advance in science and technology. And as I explained, that doesn't mean to say it has to be completely unique and original, like a patent. What it has to be is something that you've worked on because you can't get hold of the information in the public domain, and you have taken what you're doing a little bit forward in your sector. So I'll give you some examples of that later at the end with some case studies. But that could be you working with new materials. It could be you absolutely trying to understand how you design something in a way for something that hasn't been designed before. And often if you think of doing a sort of pitch to get work as a civil engineer or something like that, you're always taking problems. You know, as an architect, an engineer, a designer, a maker, you're always taking problems and working out how to solve them. In this respect, that's what R&D is. You're taking a problem, you don't know if you can solve it. You're pretty sure you could, but you don't know how at the end of the day. That is an advance in science and technology. And I'm afraid the sector that you all work in is probably one of the lowest sectors in terms of claiming. And my suspicion is it's because you're doing R&D, this definition, all day long, and therefore you don't consider it different because it is literally part of your job. The other thing is you have to prove scientific and technological uncertainty. And what that means in the legislation is that you don't know how to solve it. You know you probably can solve it, but you're going to take some wrong turns. You're going to go up some blind alleys. It is not a linear process where you go step by step by step and you know what the end result is going to be. That in this definition isn't R&D. R&D is when you're failing, then succeeding, and then you're overcoming challenges. So if it's very logical and step by step and easy, it's not considered R&D. Overall knowledge or capability, basically anybody in your sector that knew what you were trying to achieve would recognize the fact that you're helping the sector in general, even if you don't give your secrets away. But another expert in your arena would say that what you're doing is definitely pushing knowledge forward. And then appreciable improvement. And again, basically, this is the words in the legislation. It means that what you're doing is taking it forward. You can see there is an improvement that's been made. It hasn't been static. It hasn't just kept you at the level that you're going. It's taken you forward. And then system uncertainty. And this gets missed an awful lot. And essentially, it's particularly gets missed in the digital arena where somebody says, well, and it could be in material science as well. Well, I've got this piece of software over here, and I've got another piece of software here, and I've got a piece of software here, but they're all proprietary. I bought them or I've open sourced them. And then I've spent time putting these things together because I want them to work in a particular way. And therefore, some people will say, well, that's not R&D for R&D tax relief because you bought all these proprietary things. But there is something called system uncertainty, which means that you don't know how those things are going to react. And therefore, what you're doing is you're connecting and you're building other things, bridges or APIs or whatever it might be, to actually make the whole system work. So in a factory or as an engineer or as an architect, you may well have lots of different parts of the jigsaw that you've got from somewhere else, but you putting them together is still considered R&D. Another thing that gets missed, which if you are doing R&D tax relief claims, please can you check that you're putting this activity in. And basically there's something called qualifying indirect activity. So while it's very obvious that you've got a CAD designer or a material engineer or I don't know, whatever, you know, an R&D person who's working, you could claim all their expenditure. You are allowed to claim for anybody that supports that team. So it may be that part of the finance team are modeling how this might work financially in the sector and doing some groundbreaking stuff there and supporting you. It may be some of your sales team are being involved in the testing. They're testing it out in the market or asking clients, you know, how it's working for them. Or you may be having some admin people or some managers who are supporting the development team in meetings or in other ways. So qualifying indirect activity is an allowable expense. It's not just the obvious people working. It could be, for example, in the factory running through a test or whatever. quick look at the categories of qualifying expenditure. The first most obvious one is employee costs. So anybody who's working in your team and being paid on PAYE it can be counted. Obviously, only the time that they're working on R&D is eligible. So it might be that they're working on something 1 day a month or 1 day a week. HMRC do not expect to see timesheets. They'd expect, if you're putting these in year on year, for you to have some sort of time recording system, but it's perfectly allowable, especially in the early stages of you submitting this, that you can put 10%, 20%, 25% of somebody's time. You have to be fair and reasonable, but you're allowed to do it as a broad brush like that. Allowable employee costs as well are anything that you pay them in terms of their remuneration. So that could be pension, bonuses, or anything like that is allowable. And of course, employers' national insurance contributions, which are pretty hefty, so that's not bad. Materials, any materials that you're using in order to develop R&D are allowable. Excuse me. So the only time they're allowable is when, as HMRC described them, they get used up. So if you are using materials and then you subsequently reuse those materials and sell them on to your clients, that's not allowable. But if you have materials that are used up in the process of R&D and you can't use them again, then that's allowable. Let me just have a swig of water. Sometimes you have to estimate materials because it's almost impossible to pull material costs out of your expenditure. So for example, we have a fudge manufacturer who literally orders tons and tons of sugar every week. We cannot possibly pull out the exact amount of sugar they use for their new products development. So what we have done is come up with a reasonable methodology, if you like, to estimate how much of that material cost goes towards development. Excuse me just 1 second. Another thing you can claim is utilities. So you can claim a proportionate amount of utilities if you pay those directly. So that's your gas, electricity, water. Unfortunately, not your business tax, council tax, I'm afraid, but those things you can use. And again, proportionate depending on how much R&D you do. And then subcontractors. We're allowed to not claim the whole cost of subcontractors who are working for you on development, but we're allowed to claim a proportion of subcontractor costs. And the reason for this is that HMRC say that some subcontractors charge you per hour or per day, but also included in that is their, marketing materials, marketing costs, all sorts of other things. And therefore we're allowed to claim a proportion of subcontractor costs. And finally, capital expenditure. In general, a wee bit complicated, but in general, you cannot claim capital expenditure for R&D. There is other methods of doing that, such as capital allowances, but generally this is a revenue sort of saving and not a capital saving. So your accountant will be really up to speed on writing off capital and getting any tax allowances for capital, and that will be done via another system. So these are just your revenue costs. Calculations for payable tax credits. I'm not going to go into this because again it's highly complicated in many ways, but a pretty decent rule of thumb is that you will get around, I would say, between 18 and 33% back of what you have of R&D expenditure that you've incurred. Pretty good rule of thumb is about a quarter, but it does depend on whether you're in loss or whether you're in profit or whether you're just breaking even. But there is, personally, I don't think there's any reason not to claim. If you can get money, why not claim? You'll never be out of pocket doing this. And so working on the basis of about a quarter of what you spent, you will get back is a reasonable assumption in most cases. And again, what you need to do is work out with your accountant whether you want to take, so if you're going back, whether you want to take cash or whether you want to use the tax benefit to reduce your tax bill going forward. You're allowed to go back 2 years to claim, and if you do a retrospective claim, it allows you to decide whether you want to take the tax benefit or the cash. If you're making a profit and you're going forward and you're putting in your live corporation tax return, it will just reduce your tax bill. But hey, that's a good one. I hate paying corporation tax. But if you're in loss, it is likely that you will get a cash payment. Sorry, just said that while taking the cash. So I'm afraid I'm going to return to myself rather than my screen, my slides. And I'm very happy to take loads and loads of questions. I think it might be useful just to start with, if that's okay, Doug, just to explain a couple of people that we've done R&D tax claims for. So if I look at, for example, energy, utilities and environment, we've had a lot of claims where people have been sourcing and combining new materials that they haven't previously used, particularly in the green energy sector. And all of that work and effort of sourcing that, trying to understand how these new materials react and trying to build those into a particular process have been eligible. We've had people who've been working on solar panels, how to adjust and install those for maximum energy output, because they've taken systems from overseas which actually aren't suited. The energy output isn't suited to UK weather patterns, and therefore all the adjustment they did with that was eligible. Loads and work with clients on reducing carbon emissions and changing processes so they were becoming more environmentally friendly. Loads of you be working internally on projects like that and possibly not realizing that that is considered R&D in this scheme. Again, lots of clients developing new technologies and methods to make utility supply cheaper and more efficient, and quite a lot around new legislative requirements for consumer and workforce health and safety, and how people have been working to try and incorporate those. In terms of engineering, if your client is paying you to develop, then you can't claim. But if you are self-funding, trying to work out, particularly when you're pitching for new business, trying to work out, you know, for example, we did a really interesting new bridge system that had really significant geographical and geological issues and build limitations. And the time and effort the engineering team had to work that out, they weren't getting compensated by the client, and therefore that they could claim. Quite a lot around developing solutions to stop corrosion of materials in challenging environments. Again, reducing carbon emissions, quite a lot of that. And developing bespoke CRM or stock control systems, particularly for manufacturers. In terms of architecture, again, we've done stuff in naval architecture, in aerospace, all sorts of other things where architects and designers are really looking at quite difficult, challenging problems. Although they've won the business from the client, they didn't get paid to do the solution itself, and therefore we claim all the time they took to get to that solution. And then finally, in the materials science sector, again, lots of people having challenges to make things that are either vegan friendly, environmentally friendly, reducing carbon emissions, or just generally making the building sector or the manufacturing sector more efficient or effective. So, Doug, over to you.
All right, but yeah, thanks, Sue. That's a lot to take in.
Sorry about that.
No, that's fine. That's fine. I've said to the guys, if you've got, I appreciate some of the questions may have some more nuances and stuff. So rather than typing questions into the chat box, if you want to give us your name and then you can unmute your mic and ask your question directly to Sue if you've got one. I think the big one that screams out for me, Sue, is we've talked over and over and over and over again in these webinars about the changing design process in practices. There is You know, the REBA work stages, you know, there's a lot of stuff on post-occupancy evaluation, which is getting pushed harder and harder, but also just more thorough, sustainable design at earlier stages in a project than is traditionally done. And in parallel to that, there are various, we've talked about the REBA climate challenge, which is a voluntary framework. And many architects can see the benefits of going well beyond building regulations, not necessarily at excessive cost to their clients, but that creates challenges in its own right because of the level of analytics that you need to do, and changing your process to make sure that it's still a kind of a sensible commercial proposition for your clients. So that's a long way of saying one of the things that may be more relevant for architects, and is certainly relevant for us, is if architects want to do something more sustainable, maybe they're looking to refresh their working practices, look at doing better analytics earlier on in the design stage, which is generic for all their clients. They just want to up their game, and that may include working with you know, other specialists in order to do that. Is that something that they can claim because they're improving their design process, and that may be looking at alternative materials or looking at alternative construction solutions to improve their knowledge and design? Is that the kind of thing that architects could get?
Yeah, absolutely. Yeah, absolutely. I mean, the point of this is to make, the point of this legislation was to help fund businesses be more efficient and more effective.
Okay.
And I think, in essence, I think it was brought in quite a bit in terms of manufacturing because of the challenges competing with Southeast Asia, and you know, the cost base there being very different, and therefore it was brought in to, I suppose, compensate, but also to encourage people to be more efficient and effective. And so if you are doing anything like that, I mean, in the digital world, sometimes it's called Google time. If you give your staff a certain amount of time where you're not reaping in, you know, fees or whatever, then, but they are working on trying to make your systems more efficient and more effective, or to conform to some legislation that gives the company an overall benefit, then all of that time is allowable. So it could be you've got somebody who's spending 1 day a week on that. Well, you know, that's 20% of their salary, which we're allowed to put in. And I think a lot of people think, oh my God, I don't think I'm really doing much. And then, of course, when you sit down and think about it, of course you are. All businesses are doing some type of R&D.
Yeah. Yeah. And I think when you were saying that, I was thinking, about, and this is I'm going to make a gross assumption here. Often when you talk to a lot of designers, and let's talk about architects here, you know, they rely on projects to help them further their understanding, because that's money coming in and that's time, and they can kind of learn on the job. But what we're saying is, if we're careful about the time that gets carved out and it can be set aside for figuring out how to put together a lower embodied carbon wall construction for the benefit of all their clients, that is thinner, that has lower embodied carbon and lower embodied energy, or just furthers the development of their overall design. If they carve out that time, then that's time that they can put against this claim and get essentially paid not only from their client for the next job, but also for genuine development of furthering their
yeah. I mean that's in a way that's a very obvious one, as long as the client isn't paying you directly for that time, and most
exactly
don't. You know, you're having to do that work to which underpins your services.
Sure.
A very good comment here from Claire, who's saying, you know, if architects tie this into their ISO 14001 accreditation, it does show clear evidence. But you know, that's our job to show the evidence, really. But again, I think Claire's point is, if you're striving for those types of accreditation, then you're naturally doing R&D.
So for those who aren't familiar with ISO accreditations, what is 14001? Is that a quality accreditation? Is that a quality standard or another one?
Yeah. I think Claire could answer that for you quickly.
Yeah, can I do that? Because I actually did that for a year at Broadway Mallion Architects. So there were 600 staff there, but it applies to an architect of any size. So 14,001 is your quality assurance. So it's how you manage your business. So it enabled me to come off my job full time as an architect to look at the processes throughout the business and then make those changes so that we could roll it out across the business. So it does apply to an architectural practice of any size. It gives that staff member the time to look at the way you work and improve it. And then that evidence I then gave to somebody like Sue, and it actually paid for my job. So it was a really valuable lesson that we learned. I just wish I'd applied it to being a business of one. I now know how to do that. So thank you, Sue.
That's okay. It's a really good point, Claire. And Miguel's asked another question as well, which is very much tied into that. And what he's saying is, does the improvement need to be in the performance of systems or materials, or can the development be in the efficiency of teams? And I think Claire's answered that for you in a way, Miguel. Yes, it can be in the efficiency of teams, as long as it's adding to the overall knowledge of the sector. So if it improves efficiency of teams, because, I don't know, the cleaner's better at cleaning the office or something, probably not. But if you're looking at how you service your clients in a technical respect and how you can make the processes better and all that sort of stuff, a little bit like Claire's just described, then that is eligible. And as you said, in particular, if you are developing software, trying to automate internal workflows, trying to look at how you charge fees, or how you record your time, or how in general you're more efficient, or how you cost materials, then yes, that is R&D.
Yeah, I mean, this is, that particular question from Miguel, I mean, that really chimes with a lot of the work that we do. I mean, we have a free embodied carbon calculator, which we released over a year ago. And again, that was in Excel, but it helps teams. It's available for people for free, but it's a tool that allows you to figure out stuff that you otherwise wouldn't be able to figure out what you would be able to claim on that, of course, is the time anybody worked on that, which would be their salary costs. If you had to get a subcontractor in because you needed them just to do a little bit of coding to enhance Excel that you had, and of course, any of the team who supported you, who might have been trialing it or whatever and was spending time doing that, then obviously we could put their time in too. So yeah, there you go. Brilliant. Okay. Any other questions from anybody else? Feel free to put your name down if you've got a...
What I've done is I've put my direct email address in there, and if anybody wants to email me direct, I'm really happy to say, yeah, what you're doing seems like it's eligible or it's not, and I'm very happy to take those questions personally. No obligation. You can then do what you want with that information, but I'm very happy to take that view for you. Yeah,
great. And obviously, Sue, everybody on this call has a kind of a MESHWORK login, so you can directly message Sue, or join a conversation that's being had between Sue and anybody else on the platform. Okay, that's great. Nobody else is. I'm
just gonna add one more thing, I think, Doug, because we don't have any more questions.
Sure, yeah.
The thing that you can do is, let's say your year end is the 31st of March. You obviously can claim for this year as we're going forward, 2021 to 2022. And then when you finish that year, you put in your tax return with R&D tax relief claim. But you can go back 2 years. So if your year end was 31st of March, 2021, you would be able to claim 20 to 21 and 19 to 20. So you could go back 2 years. And that is where most people take the cash, because actually they've already either paid corporation tax and they've paid too much, or they were making a loss. And in those circumstances, it generally means that you'd be getting cash back because you've overpaid tax, or you've made a loss, and this is a cash fund for you. So don't forget, it's not just your current year. If you haven't done R&D tax relief claims, we can go back 2 years, which is pretty handy.
And the other element, which I find amazing, jaw-dropping when it comes to government response, is how quickly you get the money as well. So people might imagine, if they're not familiar with the R&D tax credits claims process, excuse me, that it's laborious. It takes months and months and months and months and months to do anything. You know, I know from my personal experience, it doesn't. It takes, you know, weeks, or, you know, a week or a couple of weeks. You know, it is not a long, protracted thing. You've just got to figure out or work with somebody to help you figure out what is.
Yeah. I mean, and also, you know, HMRC don't want you to send loads of invoices. They don't want evidence, funnily enough. They just want an overview of what you spent. It's actually one page. You then have the total, which goes on the actual corporation tax return. It's the R&D report, and companies like ourselves don't ask you to write anything, don't ask you to fill out any form. It's not like applying for a grant, which is a nightmare. What we do is we just interview you or one of your team, you know, for an hour or so, get you to check the report. You know, we do all the work, and that is the point. And I would say on average, it probably doesn't take more than one day of your time. And when you consider that you may well be getting £60,000 back, that's a lot. As you're saying, the HMRC do have an SLA of when they're supposed to respond, which is 28 working days. And on average, they are pretty good. But that you will get the money between 1 and 2 months in general. A bit longer over Christmas, where they tend to have a little bit of holiday, but that's in general.
Great. Okay. Well, Sue, thank you very much for your time.
Yeah, I'm sorry it's a bit of a boring subject, but it's quite an important.
No. Well,
if there's anybody we can help who wants to get any money, or you just want somebody to tell you whether it's like to be eligible, I'm really happy to do so.
I tens of thousands of pounds is never boring, certainly when it's going into your bank account rather than leaving. So if anybody thinks that's a boring subject, they're on the wrong webinar. But yeah, as I say, a big thank you, Sue, and as I say, your door is always open, and so we're happy to have conversations, and that's great. Just to remind you guys of next week's webinar, David Reed is going to be doing that one. That's a technology masterclass on building cooling. So we're going to go back and have a look at technology. David's busy writing that one. Thanks again, folks. Thanks again for your time, and hopefully we'll chat to you between now and then. But otherwise, we'll see you next week. Take care.
Have a good week. Yeah.
Thank you. Cheers. Thanks, Steve.